Okay, let's jump right in. Welcome, everyone, to the deep dive. Today, we're really focusing our lens on just one specific source. It's a market and economic briefing from Monday, June 9th, 2025.
Mhm.
And our mission really is to pull out the most critical pieces of information, the key insights from inside this report. We want to help you quickly get informed on the important movements in the markets and the economy, at least as they were captured on that date.
Exactly. And, just to give you a sense of what this material covers, it really is a snapshot of that particular moment in time. We'll be looking at stock market news, touching on some of the broader economic trends playing out globally. We'll note some upcoming events that the report flagged as important, and even dive into some company specifics, things like recent earnings, potential IPOs that might be coming down the pike. It's all drawn directly from this one source document.
Absolutely. Okay, so let's start where the briefing does with the market recap. It looks like Friday, June 6th, ended on, well, a pretty strong note, according to this.
Yeah, quite strong. All three major indices saw gains, actually exceeding 1%.
Right, the Dow Jones Industrial Average, it added a solid 443 points. And maybe the most striking detail, I thought, was the S&P 500 closing above 6,000. First time in, what, over 3 months.
Which, as the report points out, really signifies a moment of positive momentum. It reflects how investors were feeling heading into that particular weekend. It definitely suggests a burst of confidence was sort of captured by the market that day.
Yeah, clear upward swing that really stood out in the data. Now let's move into some of the company-specific stuff this briefing highlighted. There were several interesting developments mentioned. First up, media giant Warner Bros. Discovery, ticker WBD. This source reported they're actually planning a pretty major strategic split.
Yeah, a big one. Two distinct public companies by the middle of 2026. That's the plan outlined here. And it's explicitly aimed, the report says, at separating their streaming and studio assets from the more traditional cable network side of the business.
And the market reaction.
Pretty immediate and positive, according to the briefing. Shares jumped 9% in pre-market trading right after the news broke. So that suggests investors were, well, pretty enthusiastic about that potential restructuring, maybe seeing clearer focus ahead.
A clear signal of how the market was viewing that potential unbundling.
Okay, meanwhile, over at Apple, ticker AAPL. The timing of this briefing is interesting. It puts it just ahead of their annual developers conference, WWDC.
Right.
But the source was already pointing to some specific headwinds Apple was navigating right then.
Yeah, a few key things were mentioned. The briefing noted stalled AI features, which is obviously a huge area right now. Also slower than anticipated sales for their Vision Pro headset. And significantly, there was a recent court ruling mentioned that had blocked them from collecting their standard App Store fees on external purchases made outside the App Store.
Okay, so those points together, they sort of paint a picture, according to the source, of potential challenges for Apple across future growth areas and maybe even existing revenue streams. Yeah, that's certainly a lot for one company to be juggling at the same time, different parts of the business facing pressure.
Definitely. Okay, shifting focus now. Let's look at NVIDIA, NVDA, obviously a huge player in tech and AI. The briefing detailed some of their recent activity, specifically in the UK.
The source reported that Nvidia's CEO, Jensen Huang, had announced new investments specifically targeting the UK's AI sector. This included some concrete plans to expand their GPU deployment capabilities over there using cloud partners Nebius and Nscale.
Okay.
And separately, the briefing also noted that British regulators were, interestingly, partnering with Nvidia to develop a specialized AI tool specifically for banks.
Which is interesting, isn't it? Because it shows
Yeah.
the reach isn't just selling hardware, the chips.
Right.
It's also about building out that ecosystem infrastructure through partners and even collaborating directly on regulatory technology.
Exactly. It's a broader strategy.
Okay, another major company mentioned, UnitedHealth, UNH. They were reportedly considering a pretty significant move down in Latin America.
Yeah, the material indicates UnitedHealth was in talks, potentially, to sell its Latin American unit. It's known as Banmedica. And the possible price tag mentioned was around $1 billion.
$1 billion. So this looks like maybe a strategic retreat from the region.
Seems that way. And the briefing kind of puts this decision in context, mentioning it's been a tough period for the company. It notes a 40% year-to-date stock drop,
Well,
a recent leadership shakeup, and also facing scrutiny over alleged Medicare fraud. So lots going on there. The report also mentioned bids from Patria and Anna were being considered for Banmedica.
got it. So the source suggests this potential sale is happening amidst a pretty complex set of pressures, both internal and external, facing UnitedHealth.
Okay, moving to the intersection of automotive and tech. Tesla, TSLA. There is a notable personnel change highlighted in the briefing.
Yes, according to this report, Tesla had just lost its head of robotics engineering, Milan Kovac.
And the timing here is interesting, as the briefing notes this departure alongside Tesla's really ambitious internal plans. They were aiming to produce 5,000 Optimus humanoid robots within that year.
Yeah, that juxtaposition definitely makes that personnel change stand out more, doesn't it? A key leader leaving during what seems like a critical phase for a major new product push.
Exactly.
Now, turning to banking, UBS faced some regulatory news out of Switzerland, mentioned here.
Right. Switzerland had proposed new capital rules, specifically targeting UBS. The report detailed that these rules would require UBS to hold an additional $26 billion in core capital.
$26 billion.
Yeah. And it would also require its foreign units to be fully capitalized independently.
And the briefing noted that this could potentially impact UBS's ability to do share buybacks, which is, a common way banks return value.
Exactly. That was a potential consequence highlighted. But what's fascinating, though, is the market reaction that the source cited here.
What happened?
Shares actually rose 3.8%.
Interesting.
Yeah. Which suggests that, while the rules are substantial, maybe investors saw them as less damaging than they might have feared, or perhaps the certainty was better than the uncertainty. They sort of priced in the new reality positively.
Yeah, sometimes that market reaction tells you as much as the news itself about expectations. Okay, this briefing also touched on changes in online content moderation policies.
Yes. It reported that YouTube, part of Alphabet, ticker GOGL, had, somewhat quietly, made changes to its moderation policies. The material characterized this shift as favoring freedom of expression more broadly, especially in politically sensitive videos.
And it specifically mentioned they were raising the threshold for content to be removed entirely.
That's right. Which, raised concerns within the briefing itself. It highlighted the potential for increased misinformation risks because of this policy adjustment. It really underscores that difficult balance these major platforms constantly face.
Yeah, it certainly sounds like a complex tightrope to walk. On the legal front, the briefing included an update on Hunter Biden's legal actions.
Yes, the source just noted that Hunter Biden had withdrawn his lawsuit against Fox Corp, FOXA. This related to its 2022 miniseries about him. The briefing added context, stating this was the second time he had withdrawn legal action related to alleged defamation and privacy violations. That's simply what the source reported on that specific legal matter.
Right. Okay. And finally, in the world of consumer goods, there was a pretty significant product recall mentioned.
Yeah, BowFlex recalled 3.8 million adjustable dumbbells.
Wow, that's a lot.
It is. The reason cited in the source was over 100 reported injuries. Apparently, weight plates were dislodging from the handles.
Oof, that sounds quite dangerous.
Definitely. The briefing noted that Johnson Health Tech, which owns the BowFlex brand now, is offering affected customers refunds or replacements to remedy the situation.
A necessary step, sounds like, given those safety issues highlighted in the report. Okay, so that gives us a pretty solid run-through of the specific company and market news that this particular briefing focused on. Now, let's maybe zoom out a bit and look at the broader economic trends it highlighted, which in some areas painted quite a different picture. First up, used car prices in the U.S.
Right. The source indicated that used vehicle prices actually fell slightly, 1.5% from April to May.
Okay, a dip.
But despite that monthly dip, the material noted they remained remarkably resilient overall, sitting actually 4% higher compared to the previous year.
Huh. So down month on month, but still up year on year. And the briefing offered some insight into the why behind that strength, right? And maybe the recent buying pattern.
It did. It suggested that buyers might have been rushing to purchase vehicles ahead of feared cost increases, increases potentially coming from anticipated tariffs.
Ah, the tariff effect again.
Yeah. And additionally, inventory was noted as remaining quite tight, around 2.2 million units, which also naturally supports higher price levels.
That's a really great example, isn't it? How the anticipation of future policy can directly impact what people buy right now. Speaking of tariffs and trade, the briefing contained some pretty significant and maybe somewhat contrasting data on Chinese exports, particularly to the U.S.
Yeah, this was a major headline in the report. China's exports to the U.S. plummeted. I mean, a dramatic 35% year-over-year drop in May.
35%, wow.
Yeah, totaling just $28.8 billion. The source explicitly called this their largest decline in over 5 years.
That is a massive drop to the U.S. How did that fit into China's overall trade picture then? Was everything down?
Not quite. Overall export growth for China did rise, actually up 4.8% year-over-year across all its partners combined, but imports into China fell 3.4%. So a bit of a mixed signal there. The briefing also added the context that new trade talks with the U.S. were actually scheduled to begin in London on that very day the briefing came out.
That's crucial timing for those discussions, given those really stark export numbers specifically to the U.S. Okay, sticking with China, the briefing also highlighted price trends. And this presented another kind of complex picture.
Yes. Despite various stimulus measures that China had apparently implemented, the country was reportedly experiencing deflation. Consumer prices actually fell by around 1% in May. That marked the 4th consecutive monthly decline.
4 months of falling consumer prices.
And producer prices, which reflect costs at the factory gate, saw an even steeper plunge. They were down 3.3% year-over-year.
Which is such a sharp contrast, isn't it, to the inflationary pressures that many other major economies were seeing around the world at that time.
A very different story there.
Okay, moving across Asia, the briefing gave an update on Japan's GDP figures.
Right. Japan's Q1 GDP had been revised. The initial estimate was a 0.7% annualized contraction. That was updated to a slightly less severe, but, still negative 0.2% contraction.
So, still shrinking overall, just maybe not quite as sharply as first thought.
Exactly. And the source did note one small positive detail within that. Consumer spending within Japan actually saw a slight rise of 0.1%.
Okay, a tiny glimmer perhaps in consumer spending there. But maybe the most striking export data in the whole briefing came from Taiwan.
This really jumped out, yeah. Taiwan's exports in May hit a record high, $51.74 billion. That was up an astounding 38.6% year-over-year.
38.6%. Incredible. What drove that?
Well, the source directly attributed this massive increase to a couple of key factors. One was robust global demand for AI-related components, which makes sense given Taiwan's role there, but also notably a significant surge in buying directly related to fears of impending tariffs. There it is again.
That tariff fear connection is just so powerful in this data, isn't it?
It really is. The briefing detailed U.S. shipments from Taiwan specifically, surging an astonishing 87.4%.
87%.
Just ahead of a potential 32% tariff being implemented. People were front-loading orders massively. Chip exports, too, which are foundational for Taiwan's economy and crucial for AI, also rose significantly, up 30.1%. And June growth was forecast to remain strong, maybe 15-25%.
Wow. That data truly underscores how just the threat or the anticipation of policy changes can dramatically pull demand forward, fundamentally altering trade flows, at least in the short term.
Absolutely changes behavior today based on what might happen tomorrow.
Okay, the briefing also just quickly listed some key economic events that were upcoming that week after this report came out.
Yeah, important dates for anyone watching the economy. On Wednesday, the crucial inflation rate data was due, both month-over-month and year-over-year figures, plus the core inflation rate. Thursday was set for the Producer Price Index, the PPI data, giving that insight into price changes from the producer side. And then Friday would bring the preliminary Michigan consumer sentiment figures, always a key gauge of, consumer confidence and mood.
Right. All crucial pieces that would help fill out the economic picture after this briefing was released. Good context to have. The briefing also included a quick look at some recent earnings reports that had just crossed the wire.
It did. It specifically mentioned VinFast Auto, ticker VFS, had released its quarterly earnings. According to the source, they reported revenue of $656.54 million, which was a significant increase, nearly 117% year-over-year.
Wow, strong growth.
And it actually beat analyst expectations by over $147 million. So good on the top line. However, their earnings per share, the EPS, came in at negative deal of 30 cents, which actually missed expectations by about 0 or 4 cents.
Okay, so strong top-line growth, but still facing challenges on the profitability front, at least according to that report.
That seems to be the picture presented.
And finally, the briefing listed some potential IPOs, initial public offerings that were estimated for the upcoming week.
Yes, a few names noted that were looking to go public then. Estimated for Wednesday, June 11th, was Voyager Technologies, VOYG, described as an aerospace and defense company. For Thursday, June 12th, 3 more were listed. Integrity Specialty Holdings, ASIC, which operates in excess and surplus insurance products. Chime Financial, CHYM, the well-known digital banking startup,
Oh, yeah, familiar name.
and Vantage Corp, VNTG, which is a shipbreaking firm.
Quite a mix of sectors represented there in those companies looking to tap the public markets that week.
Yeah, it offers just a little window, doesn't it, into the diverse landscape of businesses that were seeking capital at that specific moment in time.
Well, that was indeed a packed briefing. A lot of details squeezed in there. Let's just quickly try and recap the main themes that really stood out as we went through it. We saw the market closing that Friday, June 6th with that notable positive momentum, right? Indices up, S&P breaking that 6,000 mark. Then diving into the individual companies, it really revealed a mix.
Yeah.
You had significant strategic moves like WBD's planned split, alongside some pretty substantial challenges like the things Apple was navigating with tech hurdles or UnitedHealth's potential retreat from Latin America, but also areas of focused expansion like Nvidia's AI investments in the UK.
Yeah.
A real variety.
Yeah, and alongside that layer of company-specific detail, the briefing painted this really complex, sometimes contradictory picture emerging from the global economic data. You have those deflationary pressures still very much in place in China, sitting right next to reports of really robust, almost frantic, tariff fear-driven export surges in places like Taiwan. You also saw that mixed bag in U.S. used car prices and a still contracting, though maybe slightly improved picture from Japan's GDP revision. It wasn't one simple story.
No, definitely not. And what's truly fascinating, I think, and insightful in reviewing this kind of material is seeing how these company-specific pieces of news, like Apple navigating its challenges or WBD making a big strategic split, they aren't happening in a vacuum, are they?
Not at all.
They sit right alongside and are sometimes clearly influenced by those broader macro forces like the deflation in China or the very real impact of those tariff fears driving export behavior in Taiwan. This report really highlights that interconnectedness, I felt.
Absolutely. This kind of deep dive into the specific details from a source like this shows you in really concrete terms how those different levels, the company level, the market level, the global economy level, are constantly interacting and influencing each other. It's not just theoretical stuff. It's right there in the reported numbers and the decisions being made.
Exactly. It really brings it to life. So this briefing, I think, leaves us with a final kind of provocative thought for you, the listener, to consider. One of the clearest takeaways from this report, as we discussed, is how much the anticipation of future events, whether it's potential tariffs or upcoming regulatory changes, or even just the outcome of trade talks that are about to start, how much that anticipation can already influence economic behavior today.
Yeah, think about that rush to buy used cars that was mentioned, or that absolutely massive surge in Taiwanese exports to the U.S., driven, the report suggests, not just by present demand, but by what buyers and sellers feared might happen soon with those tariffs.
It's that forward-looking dynamic really playing out in the present moment.
Right. So maybe the thought to leave you with is this. As you look at the market and the economy around you, consider how this idea of anticipated futures influencing current behavior, how that might be playing out in other areas of the market or the economy that this specific briefing didn't even touch on. Where else might expectations of tomorrow be shaping the reality of today?
Something powerful to think about indeed. Well, thanks for joining us for this deep dive into the market and economic briefing from June 9, 2025. We've tried to pull out the key nuggets and insights from the source material, hopefully giving you a much clearer picture of that specific moment in time in the markets and the economy.